morning. Thank you so much for joining me on today's edition of Business Morning live on Channels Television. I'm Harriet Agbini. Of course, the markets are already open for business, quite a lot for investors and, of course, economic policy analysts as well as Nigerians to digest since the beginning of the week. A slew of, negative numbers that came in from the National Bureau of Statistics. So contending with that and, of course, having to mix with the decisions that was reached by the Monetary Policy Committee to do nothing on all of its rates, coupled with the fact that there's continuous pressure on the currencies at the interbank foreign exchange market as well as at the on the street market. It's been quite a lot to chew over, and also looking at the fact that the Senate yesterday was actually very critical about the 2017-2019 medium-term expenditure framework and fiscal spending plan that was sent in by the executive, taking a look at, of course, the parameters for oil for the year. 2.2 million barrels per day. They say was not realistic, especially in light of what's going on in the Niger Delta region, constant vandalism of oil pipelines that has seen crude oil production drop from about 1.9 million barrels per day, hovering around 1.4, 1.5 million barrels per day. And of course, the exchange rate at 290 naira to a dollar, they say, is also not realistic. So the benchmark price for oil per barrel, $42.05 for 2017, and oil production, as I said, of 2.2 million barrels per day, they say is not realistic at all, as well as the range for the naira to the dollar set at 290 per dollar. At the interbank foreign exchange market, as of yesterday, we saw the naira closing flat at 305 naira to the dollar, but at the street market, it's been hovering around 400 and let me get that figure for you. About 470 naira. Yes, it's been flat, and as well as naira to the British pound flat as well, 565, and to the euro. But going back to the deliberations yesterday by the Senate, they are of the opinion that these numbers need to be reviewed in light of economic realities and then should be represented again by the executive. Instead of talking right now about deliberating on the 2017 budget, what the spending plan will be for 2017, especially as there have been growing calls for the government to spend more to exit the country out of recession. There's instead deliberations, back and forth, criticism on the MTEF, that's a medium-term expenditure framework and a fiscal spending plan that has been sent in to the Senate. So we'll keep our eye on that particular developing story. But on the program today, we're hoping to talk about the state economies for a little bit. I'll be joined, I hope, by Shehu Nigbinde, who is the Chief Executive Officer of Budget. He is unfortunately caught up in traffic. We hope that he gets through that traffic and gets to us. Also on the program, we'll still be talking about the state of the economy. Bismarck Rewani, who is the Managing Director of a financial derivatives company, will be joining me on the program much later, and we'll also be focusing on the state of the oil and gas industry and latest activities that are coming out from the Nigerian National Petroleum Corporation. That's what we're tracking for you today. Bids opening for the 2016-2017 NNPC oil contracts will be going on in the nation's capital, Abuja. But let's run you through some of the markets that we'll track here for you on the program. We're starting from yesterday's trading figures from the Nigerian Stock Exchange, and we saw that the midweek session ended in positive territory, halting nearly 8 consecutive trading days in the bears territory. The equities market gained 0.22% to end at 25,517. The session was largely driven by gains recorded by Nestle and Guarantee Trust Bank, even though we saw losses recorded by some oil and gas heavyweights, including Forte Oil and Total. We'll get to that in a bit. But at the end of the day, total volume of shares exchanged increased by about 37% to 165.72 million shares. We saw total value dropping by 5% as investors, as we saw that coming in at 1.12 billion naira, and deals came in at 2,484. For the bonds market yesterday, we saw that's largely quiet as investors favored mostly treasury bills. So let's take a look at the list from the FMDQ OTC's securities market. That is, yesterday we saw total number of deals done on FGN bonds at 60, valued at 7.52 billion naira. The most actively sought after bonds by investors, the bonds maturing on the 22nd of January 2026, we saw a price high of 83.30 and a value of 2.60 billion naira. But we saw muted activity around bonds maturing on the 27th of January 2022 and the 13th of February 2020. Those had price highs of 102.70 and 99.49. But take a look at the value before the bond maturing on the 13th of February 2020. We saw a value of 1.10, but for the bond maturing on the 27th of January, we saw that with a 900 million naira total value at the end of the session, with only 9 deals done. So, as I said, the treasury bills market remained quite upbeat as investors were positive around that segment of the market. Taking a look at the bills most actively traded, mostly short-dated to medium bonds, particularly the bond maturing, the bill